Welcome to Shadow of Truth, and today is Monday, March the 14th, 2016, and your hosts are Dave Kranzler from Investment Research Dynamics, and my name is Rory Hall, and I'm with thedailycoin.org. How you doing today, Dave?
I'm doing well, thanks, Rory. Looking forward to restarting our market update series. I just wanted to let the listeners know real quickly that since the last time we did one of these market updates, I debuted two newsletters. One is called the Short Sellers Journal. I give people ideas on how to take advantage of the overvalued stock market, and the other one is brand new. Last week was the first issue. It's the Mining Stock Journal, and I think we're getting ready to head into the next, maybe the final leg, and probably the most exciting leg of the precious metals bull market. And I'm going to focus on presenting as much as possible junior mining stock ideas, with some ideas on some larger cap producers if I think they look good at the moment.
Sounds good. I mean, it sounds like you've been very, very busy, and I know you've been busy. Just want to remind folks to take a look at some of the original work that I've been cranking out over at thedailycoin.org, and I would greatly appreciate any and all support that you can give me over there. Dave, we've got Paul Craig Roberts coming up next week. I want to let folks know about that. That'll be on Monday the 21st, probably released that day. If not, be on the Tuesday the 22nd at the very latest. And we have a mess of a market, and we've got a lot to talk about, so we should just jump right in. What do you say?
I think that sounds like a good idea. Let's do it.
Here we go.
The earnings management that's applied now is much more extreme, and the gray area for them to exercise earning management is much wider now. It's much wider now than it was 10 or 20 years ago. So, for instance, if you were to apply the GAAP accounting standards that were in place, say in 1990, my guess is the S&P 500 earnings would be about 50% of what they are now.
I bet.
Right, and so if you just make that assumption on, and I saw a reference to a guy who did that exercise using the GAAP numbers that were in place before 2008, the GAAP, the revised GAAP standards that were in place after 2008, and it basically cut about 30% off of the S&P earnings. So on that basis, you're looking at, if you use earnings per share for the S&P 500 the way they would have been calculated in 1990, you're at least the PE ratio, the real PE ratio on the S&P is at least twice as high as it is right now. So, and there's been a lot of other factors in there too. For instance, the financials now are 25% of the S&P 500, and they rebalanced the S&P 500 to overweight the financials about 4 or 5 years ago. And part of the reason they did that is because they part of the GAAP changes that were allowed enabled banks to do this mark-to-model methodology of valuing their assets, and so it allowed them to create phony non-cash earnings per share that help boost their perceived earnings per share, and so it basically boosts the perceived earnings per share of the S&P 500.
Yeah, because they can just say, well, I value this whatever at $10 million instead of $500,000, which is the true value.
Right, and so but the rebalancing of the S&P to overweight the financials really exacerbated the accounting, the deception in terms of reporting real accounting earnings. So, I mean, it's on a true fundamental basis, ability to generate cash earnings versus the valuations out there. This is by far the most overvalued stock market in the history of the country.
I mean, and right now, how do stock buybacks play into that, what you just described, Dave? I mean, as far as this overvaluation, I mean, because these corporations have been buying their stock at breakneck speed. I mean, and when you factor that in with the high frequency trading and the QE money, I mean, is there anything real about it?
Well, I mean, stock buybacks aren't a bad thing per se
Well,
if
what they
if
are when they've
if
been
that's the best
abused.
use if that's the best use of a company's cash. I mean, it's any we got to evaluate what a company's doing with its cash and what kind of return on investment is it going to generate with that cash. You know what I mean?
Yeah,
And so if these companies are buying back stock with their cash, that's telling you they don't have any better investments, real organic investments to make that relate to their actual business. And the
yeah,
problem is they're buying back their shares in a market that's more overvalued in history, and so the most overvalued in history. And so what it does is it transfers wealth from the existing shareholders to the people who are selling. Well, insiders are selling at pretty much the highest rate in history. So you got insiders selling into these share buybacks. And really, to be honest with you, I mean, I think there should be rules that are passed that if a company's got a share buyback program on, insiders shouldn't be able to sell at all, because that's all it's doing. It's boosting, it's artificially boosting their earnings per share, and it's penalizing long-term shareholders who hang in there at the expense. It's penalizing the long-term existing shareholders who stay in to the benefit of anyone who's selling right now. And so, I mean, it's just another part of this Ponzi scheme. And what makes it even worse, these companies are issuing a crap load of debt to buy back their shares, and that makes it even worse, because then
right.
you're basically, what happens is insiders get to bail out, and they're going to leave the shareholders ultimately with a shell of a company that's overburdened with debt.
Well, I
Every
mean,
single company doing buybacks right now is doing it based on the ability to issue debt. And they're issuing debt because there's so much cash out there at pension funds, they have nothing else to do with it, and they don't want to buy treasuries, so they'll buy corporate debt at treasuries plus 100 basis points and think that's a great return on their money.
yeah,
I mean, it's a joke. It's massive moral hazard embedded in our system right now. And all it's doing is it's transferring money from pension fund beneficiaries and shareholders to the insiders who are taking advantage of this.
which is what I was saying, which started that whole tirade that you just went on. I mean, it's artificial. It's not real. It's Ponzi. So the stock buybacks are a huge part of the problem with the overall valuation in the stock market. When that whole thing just keeps rolling and rolling and rolling, I mean, it's ridiculous. And if they don't have anything better to invest in than their own wallet, maybe invest in research, maybe invest in the company itself in developing, a new product or a new system or a new something, but they're not doing that. And the reason that they're not doing it is because they know that the economy is not real. They know that there is no economy. So why would they make an investment in something that's not going to sell? They're not going to be able to sell anything new because everybody's broke. So instead of doing that, they just pump up their own wallet by doing the stock buybacks, and they could care less about the average stockholder. They're not concerned about those people at all. And leaving them with a shell of a company, as you said, that's exactly what's going to happen. I mean, or am I wrong in all of this?
No,
I
you're
mean, that's
absolutely right. You're
because
absolutely right.
if they had there's plenty for them to invest in.
Actually, there's not, and that's
Actually,
why they're
there
buying
is. I
back
mean,
the
if they
shares.
wanted to, if we had an economy, there would be
Right. But
plenty for them to invest in. But since we don't have an actual economy, 4.9% unemployment is the biggest. It just makes my head hurt to even say that number, because it's just so far from reality. And the people that are doing the stock buybacks, they know that it's not reality. They know that they're not doing any hiring. They know that they're cutting jobs. They know that they're looking for ways to strip their company of any remaining wealth so that they can protect themselves. And like I said, to hell with everybody else. I mean, they're not concerned with that. They don't care if the company survives. They know the company's probably not going to survive. So take everything that they can now.
That's right. I mean, essentially, buying back shares tells you they don't have any better net present value projects that they could invest in their existing business. So, but what makes it worse is they're not generating the cash. They're not generating the cash flow internally being used to buy back these shares. They're borrowing the money, and that just makes it worse.
Yeah, and that kind of sounds, they're not even borrowing it, right?
And they're
Because of
borrowing,
QE.
and they're buying these shares at historically high levels. So a year from now, when the S&P is significantly lower than it is right now, these share buybacks are going to look horrible. I mean, really, if they want to implement some sort of program that'll benefit shareholders using financial engineering, which is what they're doing, issue debt and pay a huge one-time dividend. At least give the shareholders some money back. The problem is that the institutional investors who buy these shares buy them for the long run, and so do most retail investors. They're in there holding their shares while these insiders are bailing, and it just exemplifies how corrupt our system is.
I'm biting my tongue trying not to laugh when you said retail investors. Because there's not any of those. I mean, as you and when you and I spoke with Craig Hemke over at TF Metals Report, he was saying, 80-85%. I think you even said 90% of all the trading is done by computer algorithms. So there aren't any retail investors.
Well, but you got people in there and high net worth people in there who hold you got to hold stocks for the long term. I mean, there are retail investors that, it's not the same dimension as the institutional side. But then again, you have retail investors via the institutional side. So
yes, yeah.
And those are the guys that are getting hurt, and that includes pension beneficiaries.
Yep. That's what's taking the biggest hit. Unfortunately, if you're planning on having any savings, you better get something other than what you're counting on or what you're looking at on your screen, because what's on your screen is going to look a lot different, in my opinion, in very short order.
I think that the stock market, this bear market bounce is getting, a little bit, quote unquote, long in the tooth, for lack of a better analogy to use. In fact, in my latest weekly issue of the Short Sellers Journal, I wrote, privately compiled and reported economic indicators started rolling over in 2012, which is why the Fed continued to re-up its money printing, with most S&P companies having now reported Q4 2015 earnings. There's now been 4 consecutive quarters of declining net income, both GAAP and non-GAAP. Now, non-GAAP is the basically manipulated earnings management gap that they are allowed to get away with now, that everyone looks at. It's not even real GAAP. If I had told you 2 years ago that the S&P 500 revenues and earnings would decline, but the stock prices would continue higher, you would have asked me if I was smoking crack. And that's essentially, this is a crackhead stock market is really what it is, because anyone who's buying stocks here and chasing them higher, or who thinks they're cheap, it's got to be on some kind of drug, because by any metric, any real metric, not the phony, fraudulent metrics that they shove down our throat in the financial media now, but by any metric, this market it's incredibly overvalued, and it gets more overvalued by the day because these companies just keep reporting lower and lower earnings. Again, I think it's impossible to put a time frame on when this thing's going to roll over. I mean, we had a very similar chart pattern starting in August of 2015, and the market sold off hard, and then it rallied back up and over the 200-day moving average, and then started to roll downhill a little bit, and then fell off a cliff again. And we've literally, if you look at a daily chart of that, we've almost traced out the same exact pattern, and we're right back up to the 200-day moving average in the S&P 500. And I don't know if it's going to stop here and head lower, or if it's going to push above the 200-day moving average like it did last time around just a few months ago, and wander around above the 200-day moving average and then roll over. But to be honest with you, I do think we're at the point where it's technically incredibly overbought, and I do think that any whiff of unhinted news can send these stocks right back down the elevator shaft.
Well, you said that they were smoking crack, and Richard Fisher that former Fed head out of Dallas actually used the words heroin and cocaine. He injected the system with, quote, heroin and cocaine. I mean, how ridiculous is that?
Well, it's typical. These guys, when they're on the inside looking out, they're more than happy to lie to us, tell us everything's great, Fed policy's great, and then once they get outside of the inside, well, Bernanke hasn't come clean yet, and I don't know if he ever will. I think he's too brain dead, but obviously Greenspan's been coming clean, Fisher's coming clean. So I mean, it doesn't surprise me. I
yeah,
just
but
think
for him to use that term, though, for him to use those exact words, I mean, that they injected the system with heroin and cocaine. I mean, that's
it's a sad state of affairs that a guy like that can be so disingenuous while he's a member of the Fed, and then once he leaves the Fed, oh, here's the truth.
yeah, exactly. Here's
And
the truth.
he's actually
Sorry,
been
sorry
buying
for your
gold.
bad luck.
He's actually been buying gold.
I'm not surprised. I mean, if he's going to come out with that kind of truth, this system that we created, that I helped to create, we used a bunch of illegal narcotics to make you, consumer, believe that everything is all unicorns and rainbows. Well, good luck with your drug addicted stock market, because you know what happens to junkies, right? The sun always sets on their lives. Period.
Right. That's right.
And that's exactly what's happening right now. It's just a question of when, not if, the drug addict is on his way out. And I feel sorry for people that are in this system. I really do. But it's not like we hadn't been warning them.
That's exactly. Well, that's right. The thing of it is, I do think that I think that Trump's popularity reflects a growing portion of the population that understands that something's really bad, something's really wrong, and a lot of those people have probably their lives have probably been affected from being laid off and having to look for a lower paying job, that type of thing. There's also a lot of people who right now they're not feeling any financial pain in their life yet. They don't want to know. I was chatting with someone this weekend, and I started pointing out some facts, and they were like, "Yeah, you're right," and then they were like, "You know what? I just don't want to know about it." And I think that's where it is, and that's part of the human condition. People want to hope for the best and then decide they'll deal with the worst when the worst hits. Well, the problem is when the worst hits, I think it's going to be catastrophic.
I would agree with that. I mean, I think that, and the other part that people with their blinders on, what's going to happen is that when the thing corrects, as we have demonstrated, by 50% or more, it's not going to come back, and everybody's going to go, well, it's going to come back. Well, it's not going to. It's just not, because none of the policies that they're not going to be able to implement the policies and the theft that they already have, because they've already drained the system, right? I mean, they're not going to be able to do that again. They're not going to be able to say, well, we'll do some quantitative easing and print some more money up and throw it into the system, because it's just not going to work. Or will it work? I mean, if they print up, another $30 trillion of digital nonsense and throw it into the system, is that going to reflate it after it corrects by 50
That's a good
or
question.
more percent?
I don't know. I think there's a chance that the money printing, if they start to do another round of big money printing, first of all, they're going to have to print a lot for it to have a chance of having an effect. An effect being driving up the stock market. I do think there's a possibility that if they were to announce QE, I think we'd see a huge sell-off, because I think that would be the acknowledgement that their policies aren't working. So I just don't know. I mean, if you look at what happened in Weimar Germany, they kept printing like crazy until the mark was on the verge of collapse, and it kept driving the stock market higher. Well, the the lever that's been driving our stock market higher is a stronger dollar. And if they announce another big QE program or something that looks like QE, I don't think the dollar is going to go higher on that. I think it's going to get hit pretty hard. So I don't know, Rory. I mean, it's all idle speculation. No one knows. I mean, anyone who says they know is being either dishonest with their listeners or they're being dishonest with themselves. I mean, it's impossible to know for sure.
I don't think that there's any chance that it can come back once it corrects. I think that it's. I mean, there's not anybody that's going to buy the debt, first of all, and like you said, the scheme will be in full view. Nobody's going to believe that it's going to work, and the sell off would be even worse because people would just be bailing left and right, and it just I don't know. Like I said, I feel for the people that have their wealth tied up in the stock market at this point. If you're in it, I'm not a financial advisor. I got out years ago, and you may want to consider that as an option. So take a look at Dave's short sellers journal.
I'll tell you what, I actually, in my mining stock journal, no, it wasn't the mining stock journal, it was the short sellers journal. One of the trades I suggested was going long the precious metals sector and shorting the S&P. It's sort of a hedge trade, so that if they do manage to keep pushing the S&P higher, I do think gold and the mining stocks are going to go with it. Now, I do think may see a rough patch in the precious metals for the next week or two. It also means that I think they're trying to push the stock market higher, and gold and the precious metal sector has been correlated with the stock market now for, don't hold me to this, but for the better part of this year. And I think that correlation is going to continue after they're through trying to hammer the metals this week. So I think it's a good way to hedge your short on the stock market by going long the precious metals against it. And then there have been periods of time in the last 15 years when gold goes up while the stock market goes down. We've had it back in 2008. There was a 6-month period when that happened. So if you're long the metals and short stocks, that's just a double bonus. I mean, you're going to make a lot of money on that trade, even though it's a semi-hedged trade.
Sounds good to me. Sounds like something that people might want to consider with everything that's happening out there, because I look at it and it's just like, oh my God, it's terrifying to me, and I'm not even in it. It's like I just look at it and go, man, this is uncharted territory.
That's right.
They have no idea what they're doing, and it is your wealth that they're doing it with. That does not sound like a recipe for success.
Couldn't agree more, Rory.
Well, that sounds like a good place to end. What do you think, Dave?
I think we can wrap it up and look forward to next time.
Yeah, we'll do it again in a couple weeks and see where we're at and take it from there.
Sounds good.
All right, buddy. I'll talk to you later.